Have you ever thought you could acquire a home with only $1,000? It seems like an impossible task, doesn't it? But what if we told you it's not only possible, it's been done before, and it can be done again? Today, we're going to delve into the fascinating world of low-budget home acquisition. We're not just talking about buying any old shack, but a place you'd be proud to call home. We'll be exploring 5 innovative methods that could potentially turn a mere $1,000 into a key that opens the door to your very own home. These aren't just random ideas but proven strategies that have helped countless people become homeowners, often for the first time. From house hacking to USDA loans, from real estate crowdfunding to rent-to-own homes, and finally, FHA loans, we'll lay out the roadmap that could lead you to homeownership. So buckle up and get ready for this journey. Stay tuned as we unravel the mystery behind acquiring a home with just $1,000. Diving into our first method, we have house hacking. Now this may sound like some high-tech espionage, but it's far from it. House hacking is a real estate investment strategy where you purchase a property and rent out parts of it while living in another part. This may be a multi-family home, duplex, or even a single-family home with extra rooms. You live in one unit or room and rent out the others. The rent you collect goes towards your mortgage and other expenses, reducing or even eliminating your housing costs. So how can you start house hacking with only $1,000? Well, it's all about finding the right financing. Some lenders offer low down payment options, especially for first-time homebuyers. For instance, you could potentially secure a property with as low as 3.5% down payment through an FHA loan. That means, on a property worth $285,000, your down payment could be just under $10,000. However, don't forget you can also consider pooling resources with a partner or taking advantage of local down payment assistance programs to make it more affordable. Now let's talk about the benefits of house hacking. It's a fantastic method to enter the world of real estate investing with minimal upfront investment. It can also help to minimize your living expenses, and over time, as you pay down your mortgage, you're building equity in a property. Of course, it's not all sunshine and rainbows. There are potential risks to be aware of. As a landlord, you'll be responsible for maintenance and repairs. There's also the risk of vacancies or problematic tenants. Plus, you'll need to be comfortable sharing your living space. But with careful planning and management, these risks can be mitigated. The key is to do thorough research, understand your local rental market, and choose your tenants wisely. House hacking, a creative and cost-effective method that could be your ticket to home ownership. Moving on to our second method, we find USDA loans. Now you might be wondering, what is a USDA loan? It's a zero down payment mortgage loan backed by the United States Department of Agriculture. Yes, you heard that right. Zero down payment. USDA loans were created for rural and suburban homebuyers who might not otherwise qualify for a traditional mortgage. The beauty of these loans is that they're designed to help low to moderate income families or individuals buy, repair, or renovate homes in rural areas. So how do USDA loans work? The USDA guarantees a mortgage issued by a participating local lender, allowing the homebuyer to enjoy low mortgage interest rates and potentially no down payment. If you're thinking this sounds too good to be true, remember, there are eligibility criteria. Firstly, you must be a U.S. citizen, a U.S. non-citizen national, or have qualified alien status. The property you're looking to purchase must be in a USDA-eligible area. You must also be able to demonstrate an ability to meet credit obligations in a timely manner and have a household income that does not exceed the USDA guidelines. Now let's talk about the $1,000 question. How can you acquire a home with only $1,000 using this method? Well, while there's no down payment, there are closing costs. These costs can often be rolled into the loan amount, meaning you could potentially get into a home for less than $1,000. But as with all things, there are potential advantages and limitations. The biggest advantage is the zero down payment. But there are limitations too. The property has to be in a USDA-eligible area, which is typically rural or suburban. Also, there are income restrictions and not all properties may qualify. Despite these limitations, USDA loans offer a fantastic opportunity for many people. It's a government-backed opportunity that could make homeownership a reality for those who thought it was out of reach. USDA loans, a government-backed opportunity that could help you secure your dream home. Scene script. Next up, we have real estate crowdfunding. Now you might be asking yourself, what exactly is real estate crowdfunding? Well, it's pretty simple. Crowdfunding is a method where a large number of individuals pool their resources together to fund a project or venture. In this case, the venture is real estate. Imagine a group of individuals coming together, each with their own small contribution, collectively raising enough money to purchase a property. That's real estate crowdfunding in action. It's a new, innovative, and potentially lucrative way to break into the real estate market, even if you only have a small amount to invest, say $1,000. Now let's talk about how it works. Real estate crowdfunding platforms allow you to invest your money in a variety of properties, from residential to commercial. You'll become a partial owner of these properties, and as they generate income or appreciate in value, you'll earn returns on your investment. But how can this help you acquire a home? Here's the trick. Over time, your returns from these investments could grow large enough for you to afford a down payment on a home. In essence, you're using the profits from your crowdfunding investments to fund your home purchase. But remember, just like any investment, real estate crowdfunding carries its own set of risks. Property values can fluctuate, and there's always the potential for a property to generate less income than expected. It's important to carefully research any property you're considering investing in, and to diversify your investments to mitigate these risks. Despite these risks, the rewards can be substantial. Real estate crowdfunding offers a way for individuals with limited capital to get a foot in the door of the lucrative real estate market. It's an unconventional method, yes, but one that holds a lot of promise for those willing to think outside the box. Real estate crowdfunding, an unconventional but promising route to home ownership. Our fourth method introduces rent-to-own homes. An intriguing concept, isn't it? Let's dive into the details. Rent-to-own homes, as the name suggests, is a method where you rent a home with an option to buy it in the future. Usually, a portion of your monthly rent goes towards the purchase price of the home. This is an excellent way to slowly but surely work your way into homeownership, even with a budget as low as $1,000. So how does it work? Well, you enter into an agreement with the homeowner to rent the property for a specified period, typically 1 to 3 years. During this time, a portion of your rent is set aside as a credit towards the purchase price. At the end of the lease, you have the option to buy the home using the credit accumulated along with any additional money you've saved. Now let's discuss the pros and cons of this method. On the positive side, it offers flexibility. You're not committed to buying the home until the lease ends. This gives you time to save up, improve your credit score, and make sure the house is a good fit. Plus, the portion of your rent going towards the home's cost is like a forced savings plan. You're building equity with every payment. However, it's not all roses and sunshine. There are some potential downsides. If you decide not to buy the house at the end of the lease, you lose the money you've accumulated towards the purchase. Also, you'll need to negotiate the purchase price at the start of the lease, which can be tricky if the real estate market fluctuates. Furthermore, you'll be responsible for maintenance and repairs during the lease period, unlike traditional renting. And remember, not all landlords offer rent-to-own options, so it might take some time to find the right opportunity. In conclusion, rent-to-own homes can be a viable method for those who need time to financially prepare for homeownership. It's a slow but steady path to owning your dream home. And with patience, diligence, and a little bit of luck, it might just be the perfect route for you. Rent-to-own homes, a slow but steady path to owning your dream home. Lastly, we have FHA Loans. Short for Federal Housing Administration loans, these are designed to make homeownership more accessible. The beauty of FHA loans is they require a low down payment as little as 3.5%, which can be a gift from a family member or a grant from a state or local government down payment assistance program. To be eligible, you'll need a reasonable credit score, but don't worry, it's much more lenient compared to conventional loans. Now, how does this tie into our $1,000 budget? Well, on a $100,000 home, a down payment of 3.5% is only $3,500. With some smart budgeting and possibly assistance from a down payment program, your $1,000 could well be your ticket to a new home. But remember, FHA loans come with mandatory mortgage insurance, which can add to your monthly costs. Despite this, FHA loans are another government-backed loan that could make your dream of homeownership a reality. So there you have it, 5 ways to acquire a home with only $1,000. We've journeyed through the realm of house hacking, unearthing the potential to leverage your living situation to help pay off your mortgage. We've navigated the world of USDA loans, designed specifically to help low to moderate income families realize their dream of homeownership. We've ventured into the territory of real estate crowdfunding, a modern approach to property investment that enables you to start small. We've explored the path of rent-to-own homes, a unique arrangement that allows you to live in your dream home while you save to buy it. Last but not least, we've delved into FHA loans, government-backed loans that make homeownership accessible to more people. Each of these methods requires careful research and meticulous planning, but they all bring the dream of owning a home closer to reality. Remember, acquiring a home with just $1,000 may seem impossible, but with the right strategy, it's closer than you think.